The euro currency moves lower initially, getting all the way down to 107.80. It's a 6-week low before inflation data came in. Now, it was lower, but not as low as the market had anticipated. So that inflation remains elevated. We saw the euro rallying. We saw the dollar moving lower. Recall yesterday we had a Fed meeting where the Fed didn't raise rates, and the Fed chair tried to talk up the need to keep rates higher for longer. He even said literally that it's an unlikely that they'll be cutting rates at March FOMC, and still the market pricing at about 40% odds of that happening. Well, after the inflation data this morning, we saw the euro moving higher, the dollar moving lower. Still a lot of concerns in the U.S. with regional banks and whatnot. And then we have, before we can even take a breath, we have non-farm payroll in the U.S. tomorrow. So a lot going on. The euro bouncing off those 6-week lows and getting to as high as 108.75, closing at 108.70, its highest since January 24th. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you will notice that volatility has nudged lower as the euro has rallied. That's exactly what happened today. We made those lows, we saw the euro rally, and volatility crept lower. We didn't see a big move in volatility today, but it was lower at the end of the session as the underlying moved higher. Lastly, let's talk about positioning. What are speculators doing? Well, speculators, as of last week, are doing the same thing they've been doing since the early part of December. That is exiting their net long positions. Once the talk of rate cuts came into play, we saw speculators exiting those net longs. That continued last week. It'll be interesting to see off this bounce today if any of that made a shift higher and they started adding back. We won't get data for today's move until a week from Friday from the CFTC. So heading into Friday's number, non-farm payroll number, we see the euro hitting a 6-week low before rallying up to 108.70 again, closing at its highest level since January 24th.